I'm going to go to the trading floor in Chicago and visit with Scott Gecas. He's with Walsh Trading. He joins us right now. I'm so glad we have a chance to talk with you, Scott, because you guys kind of specialize in this options market, and that seems to be a very popular place these days.
Yeah, especially right now we're with pretty much all the grains across the board. You're seeing all the funds adding to their shorts. We're getting close to record shorts across the board. So what that means is all the markets are vulnerable to any type of short covering. When a short covering happens, it's going to happen really quick. And if you're not watching it, it's going to be really hard to manage any type of position. That's why you're starting to see some of the calls have a little bit more open interest building to the upside. And depending on which market, the calls are going to be a little bit more expensive, anywhere between 50 cents to $1 higher than the downside puts.
Now, right as we came into the segment here, I kind of alluded to the fact that we had the grain export inspection numbers that came out. And I wanted to take a quick look at these, if you don't mind. We had the corn coming in at 1.35 million tons this past week, and that was a jump upward from the week before when it was 1.18. Now we had the soybean number dropping to 382,000, roughly 300,000 tons, and we had last week's total for 476,000. Now on the wheat, though, we did jump upward, and we had 811,000 tons of wheat, and we had the total last week at 528,700. So it seemed on the surface like it was a bullish number for the corn and for the wheat, not so for the soybeans, but yet the markets didn't react to one iota after those numbers came out.
Yeah, and one of the reasons is because of the big short pressure right now with all the funds adding to the shorts. You know, everybody is expecting a little bit more movement lower, but if it also it's going to do is take one decent size order to get the short covering started, and again, it's going to move hard and fast.
Are the funds active in the options just as well as in the futures?
Not what we're seeing. We're seeing not really above average volume for downside puts or upside calls. It's pretty much right in the middle of the range. Volatility is a little bit skewed to the call side, like I said, but overall, it's pretty much flat to a little bit lower historically.
Interesting. All right, Scott, welcome back, and we'll take a look at our livestock trade also. Scott Gecas is our guest. He's with Walsh Trading, and we'll be right back. And let's go back to the trading floor in Chicago, visit more with Scott Gecas of Walsh Trading, and see if any of this has anything whatsoever to do with the ag commodity trade, with all the investment money flying around in some of these other markets out there.
Yeah, you know, the big surprise was with the oil jump today, and that's one of the reasons why options are so important, because going into the weekend and coming in on a Monday having a huge move one way or the other, I mean, that's what options are for, is to protect whatever you have, whether either long or short. But for the long guys coming in, it was a very nice surprise, and that's the reason, one of the reasons why, you know, you're seeing a market move as much as it has today.
So with the weakness in the dollar, does that put pressure on the cattle and hogs?
You would think, but it's really odd. Cattle and hogs market are their own different, completely different market animal right now, just due to everything that's going on with the African swine fever in the hog market. The cattle placements were a little bit higher than expected, but as well, with the stronger economy and everyone still having more work rather than, you know, the unemployment rate being a little bit higher than normal, you know, you're seeing a little bit stronger demand for beef rather than, you know, that fall off. And plus, we're going into the grilling season. We expect those markets to stay a little bit more bullish than normal.
Okay, we've had quite a bit of pressure here in the livestock trade. We did get our new midday cutout value update from USDA. So we have new beef cutouts. We have new pork cutouts. Let's take a look on the choice beef cuts. Hey, we were 98 cents higher today again at 234.63. Some wondered if maybe the lower futures would drag this down. Nay, not today. Selects were up 146 at 221.95. Let's check out the pork carcasses. Well, we had pork carcass values 46 cents higher today at 87.70. And if you look at the belly market, it was down $1.77 at 157.81. So a little pressure in the bellies, but everything else was a little bit higher on the day so far. Let's look at the futures now. And on the live cattle board, we've had a lot of triple-digit gains to report here today. We currently have June down down $1.35 at 121.33, and August down 133. If you look at the feeder cattle market right now, you currently have the August contract $1.58 lower at 159.10, and you still have October and November over $2 lower. Meanwhile, in the lean hogs, this is how we're shaking up right now. We have the June down $2 at 94.75, July down $1.80 at 98.75. So there you have it. Scott, thanks for talking with us. Scott Gecas of Walsh Trading in Chicago. So, Christina, everything under a lot of pressure. Hogs kind of sliding downward.